Hello and welcome to Safe Option Strategies, a presentation of protect and grow your money at the same time. My name is Jeffrey Dunyon. I am the owner and founder of Safe Option Strategies, and by way of a very brief introduction, I have been teaching people how to trade money in the stock market through the use of stocks and options for a little over, just barely over 16 years now. And as I've been teaching people how to do this, we've had a tremendous amount of success. I trade my own portfolio. I trade my own money. I don't teach people to do anything that I am not doing myself. And I want you to know the purpose of this presentation, class, webinar, whatever you want to call it, the purpose of this is to introduce you to our trading system and introduce you to how we are able to protect your money, or teach you how to is what I should say, how we're able to teach you to protect your money and still grow it, because that's really the ultimate goal in the stock market. If you've got any experience with the stock market, you know that stocks go up and stocks go down. Famous quote by Ronald Reagan after the stock market crash in 1987, the famous Black Monday crash. Reagan was president at the time, and somebody asked him about it, and he kind of shrugged and said, you know, stocks go down, stocks go up. And he was correct. And it's still true today. Stocks go down and stocks go back up. The challenge is trying to time things and trying to do things that will maximize the effectiveness of the market and enhance your profits, but not put you through this crazy, wild roller coaster ride like we had this last year. Now, 2020 is over, thank heavens. What a crazy year 2020 has been. There's so many things happened this past year that I don't think anyone could have predicted. And I'm probably like you, kind of glad that it's behind us now and hope that we can see something more akin to normal going forward. But I will tell you this, 2020 taught us some valuable lessons. Number one, the stock market can be very volatile and very tumultuous. Now, we had a situation that hopefully will not repeat itself again anytime soon. We had the pandemic that shut down the economy. We had the massive sell-off in the market, down over 35% at the lowest point. Then we had this incredible, unbelievable recovery in less than 8 or 9 months. After this horrific sell-off, the likes of what we haven't seen since 2008, we had new all-time highs. We ended the calendar year of 2020 multiple days of brand new all-time highs in the Dow Jones Industrial Average, the NASDAQ, the S&P 500, companies like Tesla and Zoom and companies like Roku, and I'm probably missing some. There's some others. Some of these companies up 200%, 300%, 400% in a single year. And yet, conversations I had in the last part of last year and conversations I've had with people in the first part of this year, they still lost money. Even though by the end of the year, the 3 major indexes were up, people still lost money. And what I want to do in this presentation for the next 30 minutes or so is show you how we teach people to prevent this from happening. Imagine this scenario right here, because this is really the key and the crux of everything that we're doing. Take a look at the gain that the market saw from here back up to here. Now, everybody that was in the stock market went, and this is the people that just sat and watched it, or maybe that's a bad way to describe it. These are the people whose stomach was lurching all over the place, like they were on a roller coaster ride that they shouldn't be on or didn't want to be on, and they panicked and stressed and lost sleep and saw their money disappear right here, and then they were excited that it all came back. And it wasn't until right about here that they got back to break even. Now, that's a lot of time. That's a lot of time to panic and stress about your money. People got hit the hardest who were just retired or just getting ready to retire and literally saw upwards of 30 to 35% of their retirement virtually disappear in the matter of a month to a month and a half. It was uncanny how fast this market sold off, and almost equally uncanny how fast it came back. But imagine this. Imagine if you could have put the brakes on right about here and not gone through any of this loss at all right here. And then once things turned and started to recover, somewhere right around here or here maybe, you could have experienced all of this growth. So all of this growth for you could have started right here, and look how much farther you'd be ahead. You'd be way, way farther ahead. And it's very doable. And I want to make I want to add one quick thing here as I'm describing this. No one predicted this, including me, including Safe Option Strategies. No one predicted this. There are some companies that claim to have predicted this. One of my competitors is running a brand new TV commercial, and this just absolutely kills me that they can get away with this. You want to talk about false advertising. They're running a brand new television commercial claiming that they predicted this, that they knew this was going to happen, and if only you had bought their $15,000 to $20,000 software and education program with all the bells and whistles, you too could have predicted this and not lost any money right here. Well, the only problem with that, and the reason it really kind of irks me, is that this same company has predicted this type of a sell-off 3 or 4 times every single year since about 2009. They keep predicting it. And when you predict it's going to happen that many times, you know, probably it's going to eventually. They didn't know how to predict this. They didn't know what this was going to happen. If you predict it 4 times a year and once out of 12 years it actually takes place, you're not predicting anything. It's absolutely crazy. No one saw this coming. And I'm not going to sit here and tell you that I saw it coming, but I can tell you with absolute conviction that we were completely 100% prepared for this simply because of the way we trade. Not because we knew it was going to happen, but because of the way we trade. Okay, I've got it in the upper left here that 2020 is a year that a lot of people want to write off, but there are some lessons to be learned. Let me tell you one of the most valuable lessons learned, and it wasn't a lesson learned by me, unfortunately. I'm not going to say the person's name, but unfortunately, this lesson was learned by a gentleman who my heart goes out to him. My heart is absolutely breaking for him, but I'm going to share this with you because I really want you to understand why it is so critical to learn how to protect your money if you're going to have it in the stock market. Now, if you just want to get out and go to cash, fine. But if you want to have your money in the market, still arguably the best place to make money, you've got to learn how to protect it. Back in November of 2019, this is back before the pandemic, right at the end of October, first part of November, a gentleman called me. He had looked at our program a couple of times. He was debating it, and we had a good conversation. He shared with me, and not very many people shared this with me, but he shared with me that he actually had about $350,000 in the market. Now that's a lot of money. For some of you that's small. For some of you that's a lot. It's always a lot of money when it's your money. Let's just put it that way. When it's your money, it's a lot of money. It's everything you have. This was everything he had saved and everything he had put away for retirement, $350,000. And he hemmed and hawed a little bit about the price of my program. And he said, I kind of like what you're teaching, but it's just too expensive. Now, folks, at the time, we were selling our complete, full, all the bells and whistles, everything that you could get in our program, we were selling for under $4,000. Okay? Less than $4,000 for the entire, that's all the bells and whistles, everything you could purchase from Safe Option Strategies. He said it was too expensive. He called me again, same person, called me back several months later, and he's a nice gentleman. I actually like the guy. He wasn't gloating. He was just saying, he was talking about how well he had done, but he still kind of felt like, I got to protect this. I want to protect this. We had another conversation. Program was too expensive. It was just too expensive. Didn't want to do it because it was going to cost too much money. Had a little bit of a dip. You remember that? Right at the end of January, there was a little bit of dip, a little bit of a pullback. Nothing too major. But he called me right at kind of the end of that little dip, and he was a little bit nervous. He had given up a little bit of his profits right there, still doing pretty well since the first time I talked to him. He had still grown his portfolio. But we had a conversation right there. Program was still too expensive. I said, okay, that's fine. Check back with me another time if you want to. Next call I got from him was right about here. Now, this is where the lesson becomes incredibly valuable. Okay, he could have done parts of our program for a lot less money than that. This was the full program. That's the most money he could have spent with us. There were parts of the program he could have bought for less than half of that. He called me right about here on this first big slide when things were just starting to move back up a little bit, and maybe for just a few days to a week, we were thinking, maybe the worst of this is over. Maybe it's not going to be as bad as we think. Guess what? Program was still too expensive, but at this point in time when he called me, he had lost about $40,000. But remember, this was too expensive. Last phone call I had from him was right here after things had started to recover, and then we had a big dip one day, a really big dip one day, and it looked like we were going to have a second leg of some downward movement. And this is how our conversation started. He called me up. He said, well, Jeffrey, I guess I should have spent some money with you a while back. He had lost half of everything he had at this point right in time, and he was getting out of the market and said he was never going to get back in. And I got to be honest with you, it broke my heart. It absolutely broke my heart. And here's the lesson to be learned. Folks, looking ahead, I don't want to sound doom and gloom. I don't want to sound like I'm trying to scare people into participating in our program. That's not my intent at all. But I've got to be really brutally honest with you. There are multiple analysts that are predicting over the next 2 to 3 years, we are going into a prolonged bearish market. Now, without getting into politics, it doesn't matter to me what your politics are. I don't care if you loved or hated the previous president. I don't care if you love or hate the new president. I don't care whether you're liberal or conservative, Democrat, Republican. It doesn't matter. There are multiple economists that are putting politics aside and saying we are looking at potentially a long-term bearish market. Now, I just got finished telling you I can't predict it, and neither can they, but it's starting to become the consensus. Let me show you another chart. Without looking and cheating on this, do you recognize right out of the gate what this chart is? Any chance? I mean, obviously you can see it. If you look up in the corner here, you can see that this chart ends on May 1st of 2009. This is the last time we had a long-term bearish market back in 2008. Realize that's been 13 years ago since the last time we had a prolonged bearish market. You realize last year in 6 weeks we lost almost as much as it took a year to lose back in 2008. Folks, I am of the belief, I'm not predicting it, we could have 2 or 3 or 4 more months of some very strong, very bullish markets. The markets could go haywire to the upside for 2 to 3 months because we've been told that the incoming administration wants to pump a lot of money into the economy. And again, politics aside, whether you think they should do that or whether you think they shouldn't do that, whether you're worried about the debt it's going to create or whether you're not worried about it, none of that is relevant to trading stocks. Short term, it will be good for the markets, short term. But when the reality sets in longer term, the increased debt, the unsustainable giveaways and so forth, when that reality sets in, when higher corporate taxes come in, higher small business taxes come in, higher individual taxes come in, those underlying fundamentals are likely to bring this market down. And I'm of the opinion that we're going to have a repeat of 2008 sometime in the next year and a half to 2 to 3 years. And it may even be a little more prolonged than that. And let me go back one more time to this screen. And let me just tell you, the time to learn, the time to figure out how to protect your money and how to prevent the losses is when we're in this bullish run. I think we've got another month to 2 to 3 of a bullish run in front of us. I think by the end of first quarter of 2021, we're going to start to see that same kind of tip that we started seeing in the end of 2007, where things just start to flatten and tip a little bit. And then we start getting the big rundown. I believe it's coming. Now, how do you prevent it? That's what this is about. I'm going to try and be brief in explaining to you, because our program teaches you how to do this. My goal in this presentation right now is not to teach you everything. I want to show you how we can help you do this. And it's actually very, very simple. Folks, we teach people how to collar trade. That's one of the things we do. Now, for those of you that don't like to or don't want to own stock, number one, I'm going to show you why you should rethink that. Okay, I'm going to show you why you should reconsider, even with a small portfolio. Would you believe me right now if I told you that with a $2,000 portfolio, there's a chance you could double your money in the next year and own stock, not have to rely solely on option trading? See, most people think the only way they can do something like that is if they trade options. And options are a lot higher reward. They're a lot more risk. You've got to be really careful wading into those waters. I'm going to, in a minute, after I show you what how we protect your stock and teach you how to be incredibly safe in the market, after I do that, I'll show you how you can do it with options only. But understand, it comes at a little bit more risk. One of the main things we teach at Safe Option Strategies is how to collar trade, how to use stock ownership, a long put option used like an insurance policy, and a covered call, a short call used to pay for the long put. The purpose of the short call is to get someone else to pay for your insurance. Imagine if you went out and bought a $75,000 Tesla and you are going to insure that thing. You're not going to go, I don't care if you're rich and have millions of dollars. I don't care if it's the most expensive car you've ever bought and more expensive than you should have bought. There's no way you're going to buy a $75,000 car and not get insurance on it. How great would it be to have someone else pay for that insurance? You got to think back to when you lived at home or were in college and mom and dad would pay for the insurance, right? So the long put is the insurance policy. The covered call is someone else paying for the insurance policy. And the way it works is very simple. If the price of the stock goes down, the value of the long put goes up proportionally, and you don't lose any money. How fantastic is that? And if you get into a position like this and the stock goes up, you make sure before you ever enter the position that you've got your covered call, your short call, in a place that allows you to still make money. When the stock goes down far enough, you have the option of selling your stock, or you can sell the long put, use the profit you made on the long put to buy more shares of stock. And then when the stock starts to go up, you've got more shares for less money. You ever heard of dollar cost averaging? I'm sure if you're in the market, or if you have been in the market for very long, you've heard of dollar cost averaging. You buy a stock for $100 a share. Stock goes down to $80. You buy another share at $80. Stock keeps going down. You buy another share at $60. And when you've got these three shares of stock, you've got $100, you've got $80, and you've got $60. You've got a $240 investment, and you divide that $240 by three shares, your average price per share is $80. So if the stock starts to come back up, it doesn't have to get back up to 100. You're breaking even when it gets back up to 80. And this is a wonderful way to trade. This is a very smart way to trade. Problem is, some stocks come down and they never recover to where we want. And sometimes you run out of money on the way down. Well, consider this. With what I'm showing you right here, and I'm going to show you a couple of real examples of it. What I'm showing you right here, when you buy that stock at $100 and it drops down, you sell the long put, and it's this money that buys the next share of stock. So number one, you don't need to come up with more money to buy those next shares. And number two, you lower that cost basis way, way farther down, so the stock doesn't need to come up nearly as far to be back to a break even. Let me show you how this works. A student of mine, one of the members of Safe Option Strategies, joined our program after he joined, I believe it was in June or July of 2017, but several months prior to joining our program, he bought shares of Snap on their IPO, and he got into 300 shares for about $7,200. So right up here around $24 a share, not the highest it was at on its IPO, but not the lowest. He got into some shares. And unfortunately, for the first few months that he owned those shares, that thing just went down. It just went down and down and down and down and down. And it was around July of that year that he joined our program. And the first thing that we helped him do was set up a collar trade on Snap. Now, he'd already suffered a loss. He was concerned about that, but we helped him protect everything. So for the next 5 or 6 months, while the stock was still kind of volatile, we made sure he was at least protected. He experienced some ups and downs, didn't make any money, but didn't lose any more money. Then Snap had a big earnings report and shot way up. But when it started to tip back down, we made sure he had a collar trade in place. And he made some money from those long puts on that collar trade. And with the profit from those long puts, this is key right here, no added investment. He was still $7,200 into this position. That's all. But he added 100 shares without having to spend any more money. Sold the long puts, used that profit to add more shares. Got a little bump in the stock, and then they suffered a pretty good sell-off. He had a collar trade in place. When it started to turn around, he added 500 more shares. The long puts that he had in place for this drop right here made him a lot of money. Now, the stock that he had lost a lot of money, but he was able to add another 500 shares for no added investment at all. His investment in the trade was still at this time only $7,200. Snap has had a pretty amazing recovery since then. A couple little dips back down, but overall a pretty amazing recovery. When Snap got back up to $18 a share in July, August of 2019, he had gone from 300 shares originally to now having 900 shares, but his total investment in the trade was still only $7,200. That means that with 900 shares at a value of $18 per share, he was 120% profitable. Now, here's what's so key about this. He originally bought around $24 a share. At this point in time, the stock was trading at 18. You want to do the math on that real quick? A $6 loss divided by a $24 investment, the stock was still down 25% from where he originally bought it, and he was up 125%. Continued doing the same thing. Pandemic hit, had a collar trade in place, protected it, added 400 more shares after it turned and started coming back up. You don't do this when it's still dropping. And we teach all of the things to look for in the way of technical indicators and fundamental analysis and all of that. And when he shared all the details of his trade with me, okay, we helped him back here. We helped him get everything set up back here. And there were multiple times along this journey that he was calling and saying, okay, I'm doing this now, I'm doing this now, I'm doing this now. But it wasn't until July of 2020 that he shared with me exactly where he was at. And let me get my pen marks off of there. In July of 2020, a little over 3 years after he had originally purchased this stock, he was up to 1,300 shares. the stock for the first time since he bought in was back above where he had bought. And he was profitable 376%. Now, here's the real moral to this story. A buy and hold trader getting in at $24 a share, 3 years and 3 months later would have had a profit of $2.41. And when you divide that by the $24, after 3 years of having your money in this company, you would have been up 10%. He was up 376%. You know, Snap is trading over $45 a share right now. And I haven't checked in with him to see what he's done since then. But I know the stock is now trading somewhere in the neighborhood of $45 a share. Let me do the quick math on that. If he did nothing else since July of last year, and the stock was at $45 a share times 1,300 shares, he would now be sitting in a position worth $58,000, $58,500 to be exact. When you subtract from that the $7,200 that he started with, that's a profit of $51,300. And if you divide that by the original $7,200 investment, he could, in theory, be up 712% right now today. I need to check in with him again and see how he's doing. I have a feeling he's up 600 to 700% in this position. And folks, his original investment was not huge. Now, this I'm even more excited to show you about. Believe it or not, I'm going to give you an example of a 17-year-old who's making this work for him. My son came to me. He knows what I do for a living. He knows I trade actively and I teach people how to trade. After a couple of summers in a row of having a summer job, and partway through his junior year, he was working part-time before the pandemic shut things down in the second half of it. He came to me, and he had a little bit of money. He had spent a little bit, but he had saved a little bit. But he came to me and he said, "Dad, I want to get it in the market. What do I do?" And I said, well, we looked at what he had, and I said, you know what, son? You have enough money saved to get 200 shares of Ford. It was trading around $8.50 a share right at the time he came to me. I said, you've got enough money to get a couple hundred of shares. Honestly, I had to put about $200 with it to get him there. I was happy to do it. He got 200 shares of Ford in October of 2019. Saw it go up in profit a little bit. He got a little bit of a gain, got up around $9 a share, had an earnings report coming up. So we got a collar trade in place on his Ford shares. And guess what coincided right around the same time Ford reported their earnings? We had a pandemic hit. Now, remember I said I couldn't predict this, but this is the way we trade all the time. This is the way we trade. So when things sold off pretty dramatically, he had long puts that had gone way up in value, short calls that had paid for him, and even though that stock lost a lot of value, lost more than 50%, $9 down to $4 a share at one point in time. When it appeared it was going to start coming back, he added some more shares, and he had enough money when it was right around $5 a share, he had enough money to add 200 more shares. So he essentially doubled his position, got a nice gain, protected it a little bit, had a period of time where it was flat, bought some long puts, sold some long puts to close them, rolled some short calls. There were things that we did during this time. We didn't just sit there wondering and waiting. Ford had a really nice run to end the year last year. And around the end of November, first part of December, he had 400 shares of Ford, up a whopping 75 cents from where he originally purchased them. But he's got 118% growth in just over a year. Now, this is the critical thing in this example. You don't have to have a ton of money to do this. You don't have to have a $60,000, $80,000, $100,000 portfolio. You don't have to have a $500,000 portfolio. My son did it with $1,700, folks. And I can teach you how to do this. Now, for those people who are interested only in stocks, they want some income, they want some lifestyle, or excuse me, for those people that are interested only in options, they're looking to generate some monthly income. They're not as interested in the longer term growth. They want to start churning and burning. How can I take this $100,000 portfolio and how can I start turning it into $2,000 or $3,000 or $4,000 of income every single month? Well, you're going to have to learn how to spread trade if you don't already know how to do it. And more importantly than learning how to spread trade, you're going to have to learn how to adjust trades. Let me tell you one of the things that over the 16 years that I've been doing this, let me tell you the most common story that I've heard from people. Everyone's story is a little bit different, but there's a common thread in probably 75 to 80% of the conversations I have, especially with people that do primarily option trading. And this is what they tell me. Jeffrey, I'm winning on about 3 out of 4 trades that I place, but that fourth one that I'm losing money on, it's killing me. It's wiping me out. I'm losing all the profit from those previous 3 and then some, or I'm barely treading water and barely staying flat. And every time I think I've got it down, something happens and I just get cremated. The key to getting past that, if you want to option trade only, there's a couple things you have to learn. Number one, you've got to get better at picking the right trade at the right time. And I'm going to burst the bubble for some of you right now. Stop doing credit spreads. There are a dozen competitors that I have in the investment education world that tell you credit spreads, credit spreads, credit spreads. Get paid to be in a trade. Let someone else pay you money to be in a trade. Folks, it is the biggest farce. It is the biggest hoax. It is the biggest line of BS, and it is the most dangerous way to trade in the markets is to just do credit spreads. I promise you, if you are just doing credit spreads, the time will come that you are going to get severely burned and you're going to take a big, giant loss that is unrecoverable in your portfolio. Now, lest I be a complete hypocrite, I occasionally use a credit spread, but the conditions have to be almost perfect, and you've got to learn the concept of adjusting trades and managing trades. Every time you enter a spread trade, you have an expectation of what the stock is going to do, up, down, or sideways, or maybe a variation of that, up really fast or up slow, down really fast or down kind of slow, flat for a long time or flat within a very volatile range. Regardless of what your expectation is, you've probably got, on most cases, a 30% chance that the stock is going to do exactly what you want it to do. You better be prepared for that other 70%. And it's through a concept called trade adjusting. We set up a trade back in September of last year on Amazon, and we got in the trade with the expectation that Amazon was going to keep going up. They were having an incredible bullish run. We thought it was going to keep going. We had had several successful trades on Amazon over the previous few months. We set up a trade right here. We got a couple of days of upward movement. All of a sudden, wham, they were coming down and coming down fast and sharp. And every time you enter a trade, this is a possibility of this happening. The concept of trade adjusting is simply knowing when and how to roll one or both of your options to a different expiration date or a different strike price, creating a different spread trade that now matches the new direction of the stock. Okay, now that's a mouthful. I know that's a mouthful. Folks, I've been teaching people how to do this for 16 years. I can teach you how to do it. I can teach you how to take a spread trade that is going against you, and I can teach you the right time and the right way to adjust it to match the new direction of the stock. And there is a definite science to it and a little bit of an art to it. And I can teach you how to do that. And when you learn how to do that, not only are you going to find that a much higher percentage of your trades are winning and profitable, but you're going to develop the ability to do this. And let me back up for just a second. We don't just teach you how to do this, we do it with you. Every week, we send new trades out to all of the members of our program that they can simply copy us on if they want to. We sent out 66 trades to our members in 2020. 57 of those closed for profit and 9 trades closed for a loss. I'm not going to lie to you and tell you that we never lose money on a trade. Adjusting spread trades will better your chances dramatically of having more successful trades. It will take trades that should have been an 80 or 90% loss and narrow them to only a 30 or 40% loss. And occasionally we get a really ugly one and get dinged on it. But this happens so rarely. Folks, this trade right here should have been a loss. We adjusted it to profitability. This trade should have been a loss. We adjusted it to profitability. This trade should have been a loss. We adjusted it to profitability. This trade should have been a loss. We adjusted it to profitability. Think of that scenario that I was talking about where 3 out of 4 trades, 3 of your 4 trades are profitable, but that one that's not is absolutely killing you. Now, what if you can take that 1 out of 4 that's going against you and take 3 out of 4 of these and adjust them back to a break even or a profit? That's what we're teaching people to do at Safe Option Strategies. That's how you can grow your money and keep it protected at the same time. The culmination of all the trades we sent out to our students last year had a 178% return. The Dow made 7.5, the S&P made 17. Incredibly, the NASDAQ finished up 43% on the year, one of the best years the NASDAQ has ever had in spite of the crazy pandemic. But folks, this is overblown. This is a bubble that is going to burst. Take all the politics and the potential tax increases and the potential increased regulations and interest rates and stimulus checks. Take all of that out of the equation. This alone should tell you that another pretty strong pullback is coming. Learn right now to protect what you're doing. Okay, folks, you can learn, you can protect what you already have, and you can profit all at the same time. If there's anything that we've done at Safe Option Strategies in the last 16 years that is our little niche that we've carved out, I would tell you that there's 2 things that we've done that I feel like are unique to Safe Option Strategies. Okay, number 1, I believe we are more consistent and better at teaching people how not to lose money. Our focus is not on making you rich overnight. Our focus is not a get rich quick situation. In fact, I tell people, if what you're looking for is get rich quick, we are not the right program for you. Can you imagine the owner of a company saying we might not be the right fit for you? I'm telling you, if what you're looking for is get rich quick, we're not the right fit for you. We've carved out a niche in helping people learn to not lose money. And once you learn to not lose money, making money is easy. The other niche that I believe we've carved out over the last 16 years and really gotten good at is the right balance of education and help and actual trading, the hands-on trading. You've all heard this before. I know you've heard this. Feed a man a fish, you feed him for a day. Teach a man to fish, and you feed him for life. Folks, that is a great adage. I love that saying. I have loved that saying since the very first time I heard it. I thought, man, that is right on the money. Feed a man to fish and you feed him for a day. Teach a man to fish and you feed him for life. You want to know what the problem with this is? What happens if the man starves while he's trying to learn how to fish? I've got a really good friend of mine who is one of the best fishermen I know. If he ever wanted to take time away from what he does for a living and get into some of these fishing competitions or tournaments, I'm pretty sure he would be really, really good at it. He's a great fisherman. He's taken me out with him lots of times. And he has earnestly tried to teach me how to fish, and I've gotten better over the years. I really have gotten better, but I watch him cast the line, and I think I'm casting it the same way. He explains to me the places he's casting the line to and why. He looks for the little eddies in the river, or wants the bait to be a certain distance off the floor when we're fishing in the ocean. And we've done both. We've done a few different things, but he explains all of it to me. His explanations are wonderful, and I do what he's doing, and I think I'm doing it just right. And he'll pull out fish 10 to 1 over what I will do. Even when I think I'm doing everything just like he is, I'm not getting the same result. Now, I'm still learning. I'm getting better. For me, it's going to be a lifetime process. But here's the point that I ultimately want to make with this. If he and I had to go out in the wilderness and survive off our ability to fish, he would be fine. I would starve to death. Unless I could go with him, and unless he was willing to keep me fed until I got good enough at it, I would starve, and he'd be fine. The right balance of teaching you how to do this, but keeping you well fed, is the niche that we've carved out at Safe Option Strategies. We have over 60 streaming classes in our program that teach everything that you need to know about option and stock trading, from the very beginnings of how to place a trade all the way up to the most complex strategies you can imagine, and more importantly, how and when and why to adjust those strategies. We send out multiple weekly trades. See, here's the teach a man to fish. Here's the feed them while they're learning how. Keep them fed, so that if they learn really fast, they're fine. If it takes them a while to learn, they're fine. Multiple times every week, we send out trades that you can simply duplicate in your portfolio if you choose to do that. We have daily live classes where we talk about these trades. We talk about what's going on in the markets. We talk about what the next step is. We're very interactive with our students. We have an open chat room that's open all day long for any of the members of our program to get in and get help. And there is not a member of our program anywhere in the country or anywhere in the world that cannot pick up the phone and call if they need help with something. Folks, this was an unbelievable year. If you survive this roller coaster, if you were fortunate enough to survive this roller coaster, take advantage of the fact that we've had this phenomenal bullish run, and learn how to do this now and get the help protecting your portfolio now, instead of waiting for the next time the markets drop. You know, from a marketing standpoint, look at this chart right here of 2020. Do you want to know what Safe Option Strategies' best month was from the point of new people joining our program? Do you want to know what our best month was for the entire calendar year? March and April. And it saddens me a little bit that it wasn't until people had experienced this that they said, maybe I should get some help so that I don't lose another 35% or another 40 or 50%. Maybe I should get some help. Take advantage of the fact that we've been on this phenomenal bullish run, and learn how to be positioned next time something like this happens, so that you just smile. How would you like to just smile all the way down? That's a horrible smiley face. That's what I get for trying to use a pen to draw on a computer screen. There's a chart of 2008. I'm just being honest with you. Again, it's not a scare tactic. I'm just being honest with you. We are in for a repeat of 2008, folks. It's coming. It is coming. It's coming within the next couple of years. If I'm wrong, I'll help you make a lot of money. If I'm right, I'll help you save a ton of losses and still make money. In 2008, when the three major indexes were down an average of 50%, we helped our members of our program have about a 25% return that year in the stock market. Learn how to protect it and grow it. Now, you need to, if you've seen this program or this presentation once, if you're seeing it for the very first time, if you're seeing it for the 20th or 30th time, pay very close attention to these last 3 or 4 minutes that I'm going to be recording this. I'm almost done. You've hung in there for 50 minutes with me. I'm very close to the end, but pay close attention to this because we're making a major, major change for 2021 at Safe Option Strategies, okay? We have a collar trade course that you can buy by itself. You can buy it as an annual or a lifetime membership. We have a spread trade course that you can buy on its own as with an annual or a lifetime membership. You can combine the program and buy the entire program that we have for an annual or a lifetime membership. Now, these prices over on the right, don't be sticker shocked by these prices. These are our full retail prices when we're not running any type of a promotion. Until the end of this month, we are running a promotion for 50% off of any of the lifetime memberships, meaning if you wanted a lifetime membership on the collar trade, it would only be $12.50. Let's see if I can draw in here. It would only be $12.50. A lifetime membership on the spread trade course would only be $1,500. And a lifetime membership for the entire thing would only be $2,500. So 50% off any of the lifetime memberships. But here's what I need you to understand. 2 things. Number one, at the end of January, Safe Option Strategies will no longer be selling lifetime memberships. We are going to go to strictly annual memberships. Okay? This is going to be the last opportunity ever to purchase a lifetime membership. So at the end of January, they go away completely. I'm knocking 50% off of them until the end of January. That's point number one. Number two, I love working with people that are proactive. My favorite thing about what I do for a living is working with people that are very proactive. I do not employ any salespeople at Safe Option Strategies. I have a handful of employees that help me manage the website and help me with customer service and accounting and things like that. I do not pay for any salespeople at Safe Option Strategies. And instead of doing that, I always offer an additional incentive for those people who are most proactive. So here's the deal. In addition to the 50% off any of the lifetime memberships between now and the end of January, anyone who will be proactive and either email or call us following this presentation, I will email or give you over the phone details on a limited time additional discount. So on top of the 50% off, okay, on top of the 50% off any of the lifetime memberships, for those people who are proactive and will take the time to send an email. Now, there's 2 ways you can email us. You can just start an email and send it to info@safeoptionstrategies.com, or right below the box that this video is in on the web page that you're on of ours, there's a simple form that you can fill out right below that. You don't even have to open a new email. You can just fill out that form and it will automatically send an email to us, and it'll come with the subject line pricing request. So you're basically requesting details on this limited time additional discount. Okay, so on top of taking 50% off any one of the lifetime programs, I will offer for those people who will email or call us, they will get an additional discount offer, but there will be a limited time on that. Okay, folks, I'm trying to make this affordable. I'm trying to make it doable. I love working with people that want to learn this. I love working with people that are serious about making money, that are serious about protecting their money. But I want you to know, if you don't think that Safe Option Strategies are the right fit for you, I still wish you the best of luck. I hope you find the right way to be in the market or to get other investments that pay off the way you want them to. I would love it if all of us could get rich together. But if we're not the right fit for you, I still wish for you success. I still hope you do well in whatever you take on. I love teaching this to people. Okay, bottom line, I love teaching this to people. And I believe we have the highest customer satisfaction of any investment education program that exists. With very few exceptions, our members of our program are incredibly pleased with the content and the quality of what we teach them. And I don't know what else I can say. I hope I hear from you. I hope I get an email from you. I hope I get a call from you. I hope you take advantage and take a close look at what we're doing. And if it's the right fit, I would love to work with you. Thanks for taking time to watch our presentation. Bye-bye.